Bitcoin's higher time frame prevailing trend is up. The lower time frame is painting a picture of indecision, controlled by the dominant range established in the first week of February. Bitcoin is trapped inside the range defined by the Fibonacci resistance cluster at $71,329 to $71,781 above, and the Fibonacci support cluster at $63,347 to $63,493 below. It is no surprise that Bitcoin is not moving, because when we examine the three most influential markets that can affect Bitcoin price, they are all displaying the same characteristics. They are all quiet, suspiciously quiet. Markets are treading water across the board as if waiting for permission to move. In our experience, that kind of silence rarely lasts. Today, 3 markets, 3 reads, 1 conclusion. This is Bitcoin technical analysis built on structure and correlation, not speculation. When these 3 levers move, Bitcoin will not be far behind. Welcome back. We are price action traders focused exclusively on Bitcoin market structure and price action. As always, we frame today's briefing around 5 structural questions. Where are Bitcoin's key price zones? Are the timeframes in harmony? What is volatility telling us? How are DXY and gold influencing Bitcoin? And what must change to revise Bitcoin's structure? Today, those questions get a wider frame, because a read on these 3 markets can give us clues as to the direction of Bitcoin's next price move. Before we look at the 3 levers, let us anchor today's analysis on Bitcoin's current structural position, because that context determines how much weight we assign to any external signal. At the higher time frame level, the Bitcoin yearly trend remains up, despite February's corrective swing, which dominates 50% of the 2026 price movement. It is in no way impacting the higher time frame bullish structure. A correction within a trend is not a reversal. It is a combination of profit-taking and late buyers to the party being shaken out. The yearly trend is intact. At the lower time frame, the boundaries are being set around the psychological round numbers of $60,000 to $80,000. Neither boundary has been challenged or broken. Neither side has had to defend their territory. As we close out February, it is looking likely that the month will settle toward the middle of its range, confirming indecision following a volatile move down. The current close sits at $67,515, just below the February midpoint of $69,672. 2 guardians are presiding over the battlefield. On the upside, $70,000, the psychological warlord holding the ceiling. On the downside, $60,000, the gatekeeper preventing further deterioration. One of them will eventually back down. February has shown us that neither is willing to do so yet. The standoff continues. Keep that picture in mind as we examine each external market. The question we are always asking: could a move in any of these 3 levers be the catalyst that finally forces one of those guardians to concede? Lever 1. Nasdaq 100, the risk appetite gauge. The Nasdaq 100 is the world's most watched technology index, home to Apple, Microsoft, Nvidia, Meta, and the companies that now define the digital economy. Its relevance to Bitcoin is straightforward. Both are perceived as risk-on assets. When institutional investors feel confident, they buy both. When fear enters the market, they sell both. The Nasdaq is Bitcoin's closest behavioral cousin in the traditional financial world, and they have more recently developed a high positive correlation. Where Nasdaq goes, Bitcoin is rarely far behind. The range data tells the story clearly. April 2025 was the most volatile month of the past year, a range of 3,584 points as markets absorbed significant macro uncertainty. Since then, the Nasdaq has been steadily compressing. The last 3 months, December, January, and February, have produced monthly ranges of $1,048, $1,324, and $1,788, respectively. Modest by historical standards. The weekly ranges over the last 6 weeks have been equally contained, between 690 and 983 points, with no week producing the kind of expansion that signals directional commitment. The current close sits at 25,081. Here is our take on what the Nasdaq chart is telling us right now. The Nasdaq 100 recorded 2 highs in close proximity, 26,399 on 30th October 2025 and 26,349 on 28th January 2026, a difference of just 50 points across nearly 3 months. Could this be a double top pattern forming? We are yet to have a lower high confirmation, but it is something to watch closely. A sustained break below the 6th February 2026 low of 24,329 would demand immediate attention. That is the structural line that changes caution to concern. Lever 2. Gold, the fear and uncertainty barometer. Gold occupies a unique position in this analysis because its relationship with Bitcoin is nuanced. On the surface, they appear to be opposites: gold, the ancient safe haven, Bitcoin, the high volatility risk asset. But their relationship is maturing. Both have increasingly been viewed as alternatives to a weakening dollar. Both sit outside the traditional banking system, and as institutions have rolled out Bitcoin ETFs, the two assets appear to be carving out a way to coexist more deliberately within sophisticated portfolios. What the range data tells us about gold is striking. The yearly range for 2026 already stands at $1,037, compared to $806 for the entirety of 2024 and just $342 for 2023. Gold has been expanding dramatically year on year, but zoom into recent weeks, a different picture emerges. After producing weekly ranges of $926 and $691 in late January and early February, significant expansion, the last 2 weeks have compressed to $245 and $277. The daily ranges over the last 14 sessions have settled into a moderate 1 to 3% band. Gold is taking a breather after its powerful run, catching its breath within the shadow of its dominant bar, a pattern known as a harami. Here is our take on what the gold chart is telling us right now. Gold is showing all the signs it wants to resume the move higher. It gapped up on 23rd February, and that gap remains unfilled. But we are seeing inside bars trapped within the dominant bar, a harami pattern. In an uptrend, a harami serves as an early warning that prevailing momentum may be weakening. Buying enthusiasm is waning, and sellers are beginning to enter the market. Could gold's next move be down? The pattern demands we ask the question. Lever 3. U.S. Dollar Index, the commerce currency. The U.S. dollar index is the most direct lever of the three. The relationship is well established. When the dollar strengthens, Bitcoin typically faces headwinds as investors move toward dollar-denominated assets and away from risk. When the dollar weakens, capital seeks alternatives, and Bitcoin has historically benefited. A read on DXY is a read on the macro environment's appetite for risk. The U.S. dollar index is hitting its head on the ceiling of $98. It is chipping away but not making any headway, lacking the conviction to push higher. As noted earlier, DXY is perched at the 50% mark of its 2026 yearly range. It could go either way from here, but one thing is certain: if it wants to go higher, it must first break and hold above $98 psychological round number. Until that happens, it is signaling nothing. Here is our take on what the DXY chart is telling us right now. What the ranges are telling us about the dollar index is unambiguous. The monthly, weekly, and daily ranges are all contracting, every time frame pointing in the same direction. Less movement, less conviction, less noise. The dollar index is not trending. It is not breaking out. It is not breaking down. It is simply sitting at the 50% mark of its 2026 yearly range, unable to commit to either side. Two scenarios present themselves from here. If the dollar index breaks and holds above $98, this could spell a downwind for Bitcoin. If it fails at that level and begins to retreat, a weakening dollar could provide the tailwind for risk appetite assets like Bitcoin. Right now, it is showing us neither. We watch and we wait for the structure to declare itself.
We have defined the three levers. We have defined what each is doing. Now we define what this collective picture means. Three major markets, three charts, all three treading water simultaneously. This is where structure either confirms a prolonged consolidation or something breaks. Before we go further, one observation that should not be overlooked. Look at the direction of ranges across the monthly, weekly, and daily timeframes for each lever. The dollar index monthly, weekly, and daily ranges are all trending down, contracting across every timeframe. Gold is the precise opposite. The monthly, weekly, and daily ranges are all trending up. Two levers pointing in opposite directions, and Bitcoin sitting between them, waiting for one to assert dominance. That divergence alone is worth keeping on your radar. The Nasdaq is compressing after a volatile year. Gold is pausing its strong expansion move up, held by a dominant bar with all timeframe ranges pointing higher. The dollar index is frozen at its yearly midpoint, with ranges contracting across all timeframes. And Bitcoin is coiling inside its Fibonacci corridor, daily ranges contracting steadily until yesterday's session delivered the first genuine expansion signal. When multiple major markets compress simultaneously, one of two things follows. Either the compression deepens further, possible but historically uncommon when the silence is this broad, or something triggers a violent release, a macro event, an economic data print, a geopolitical development, something the market has not yet priced. When that trigger arrives, it will not move one market in isolation, it will move all four. And when it does, the direction of the Nasdaq, gold, and DXY in those first days will tell us which way Bitcoin is most likely to follow. That is the intelligence value of the three levers, not what they are doing today, which is very little. They are getting ready to give us clues to the line of least resistance. No inside information, just a savvy read on market structure and how markets interact. Keep one eye on all three. Structure defines context. Context defines edge. Comment below. Which market do you think will move first and why? Who is providing the clues? Nasdaq, gold, or the dollar? We read every comment. A word on Bitcoin's own volatility, because it sits at the heart of today's analysis. The daily range data for the last 14 sessions tells a precise story. From the 14th to the 22nd of February, daily ranges contracted from $1,986 down to $1,091, a compression sequence that mirrors exactly what we are seeing in the three-lever markets. Then, on the 23rd of February, ranges began to widen again. And on the 25th of February, Bitcoin delivered a range of $6,022, the largest single session in February and the first genuine expansion signal from within the compression. Volatility is no longer absent. It is beginning to stir. Whether that stir becomes a sustained directional move depends, in part, on what the three levers do next. Everything discussed today reduces to one closing condition. Three levers in simultaneous compression, Bitcoin coiling inside its Fibonacci corridor. Acceptance above $71,781 on a sustained closing basis shifts the framework toward recovery. Failure below $63,347 returns sellers to control. The levers will give us the heads up. Price action remains the final arbiter.
Until one of the three lever markets makes a decisive move, Bitcoin is likely to remain within its current structural containment. The $70,000 psychological level is the first line of resistance that buyers must clear and hold on a closing basis. And the dominant bar floor at $60,000 remains the structural anchor beneath everything, unchallenged and governing everything below it. Watch the three levers. When they move, Bitcoin will not be far behind. We monitor, we do not anticipate. Discipline over prediction. The three correlating markets are quiet now. The calm is real. Whether what follows is chaotic, time will tell, but the structure will tell us first. We publish daily Bitcoin technical analysis built on structure, not speculation. If today's briefing added clarity to your analysis, subscribe. Daily at 7 a.m. EST. Comment the lever you are watching most closely, Nasdaq, gold, or dollar. The market will have more to say tomorrow. We will be here to read it. Until then, look after yourself.